Hey guys, so in this video, we will talk about the 2020 market crash and how this impacts you as a person who is exposed into the capital markets. Just a quick disclaimer though, this video is basically for long-term investors. So if you are a stock market trader, you are a position trader, you are a person who trades the volatility, this video may not be for you. You can just watch the stocks by request videos that I created. Go to playlist, click stocks by request, and you will see a bunch of videos there with technical analysis principles, or you can just go to the daily videos that I create talking about price and market action as well. But this video is primarily focused on people who want to invest for the long term. By the way, no, if you're new to this channel, super appreciate it if you could subscribe and you can smash that bell so you get updated every time I come up with new content about investing, about the stock market, about how you can trade with confidence as well. So hit the bell and smash it, and so that you get updated every time. So the whole context of this video is the 2020 market crash. Again, for long-term investors. When I say long-term investors, just to qualify it, you are in it because you want to have a piece of the company. You are in it because you believe in the underlying fundamentals of the company. You are in it because your time frame for investing is very, very long, at least 10 years plus, meaning opportunities like this to see markets drop could be a time for you to be able to exploit it, where you get to buy stuff or companies that are very, very cheap as well. Before we talk about what's happening today, let me brief you through what happened in the different crises that we had. First crisis was the 1997 Asian financial crisis, where Asia in general, the Philippines, was also hit. There was basically a property bubble. Currencies also got hit. When that happened, interest rates went higher. When that happened also, it allowed banks. Please remember, what we have right now is a product of how things happened in the past. So the banking system in the Philippines is very, very strict. It's very, very strong as compared to other countries because they don't want what happened to the 1997 Asian financial crisis to happen again. So that's why banks in the 2008 crash in the Philippines were not affected so much because of the strict banking regulations that happened in the 1997 crisis. So just so you know, the Asian financial crisis happened when there was a property bubble. A lot of the people who borrowed money because interest rates were so high, they were not able to pay, and then it bursted. So the 2008 crisis is different. So the 1997 was just concentrated in Asia. A lot of the people who were investing in the US markets were not affected. That's why if you would watch a lot of YouTube videos talking about crashes in the past, they would always talk about 2008, then they would always talk about the 2001 dot-com bubble because that was their crash in the US. It was the 2008 dot-com bubble, then the 2008 global financial crisis. For us in Asia, it's 1997 Asian financial crisis, then the 2008 financial crisis. So the 2008 financial crisis is different from 97 because people call it a global financial crisis, but the crisis really is financial in nature. Why? Because in the US, there were a lot of people who bought houses, but the difference was people who bought houses were over leveraged. Some people bought them even if they could not afford them. Some people had existing mortgages already, but they switched it to upgrade their lifestyle, to upgrade their house because interest rates were so low. That being said, also, those mortgages were placed into a derivative. And the problem there was as interest rates went higher, there were a lot of people who could not afford those mortgages anymore. They defaulted, and that those defaults hit a massive level. If that was just the case, it would have just been a property crash. It would have just been a property bubble. But remember what I mentioned earlier. They were packaged as a derivative, that the performance of those loans were packaged as a derivative. So if those loans would not have any value, those derivatives also, highly leveraged derivatives, would not have any value as well. That's what Lehman Brothers bought. That's what a lot of the countries in Europe bought as well. That's what caused a lot of the banks in America to close down. So here's the thing. Because of that, also, a lot of people lost their jobs. When a lot of people lost their jobs, uh, that's when bailouts happened in the US as well. So as you notice it also, the crisis in 1997 is massively different from the crisis in 2008. This was a bubble in Asia. This was something that started in the US for 2008 that had a ripple effect because a lot of institutions bought into those derivatives. Fast forward to 2020, we have another crisis at hand. This time, it's because of the coronavirus that started in China. We don't even know what exact part of China where the crisis was, because there's a lot of conflicting reports on how it happened. There's a lot of conflicting reports also on how big the extent of the damage is in China as well. But that being said, the problem with this coronavirus is that a lot of people who have money are not spending. And I've been mentioning this in a lot of the videos that I've created, that the economy is just basically made up of transactions. One man's spending is another man's earning. So if people can't fly out, people can't go to concerts, people can't eat out, people can't go to hotels, people can't go to beaches, all of those businesses that people would have spent on, they're not making any money. If they're not making any money right now, if they're not getting anything, then the economy will slow down. And that's what we're seeing. And the interesting about this, as compared to 97 and 2008, most of you are living in this era right now. You get to see this crisis unfold before your very eyes as well. So the difference between all of this also, since it started in China, because of them needing to close a lot of the factories, it's affecting global exports. Please remember, prior to this also, a few months before this, there was a trade war issue already between the US and China. So exports between China and US were already hit. Then you add this where their factories were closed, then it's affecting the global supply chain. Then you add retail, you add tourism, you add all of these things because of the lockdown. Then you have a very, very, very large global economic effect to different economies and to different countries as well. Before I begin, let me show you the charts. This is the Philippine Stock Exchange Index. Again, I'm not going to talk about technical analysis. I'm not going to talk about specifically how this goes for trading. But what you do know is this. This chart is from the 2008 financial crash to where we are right now. As you can see also, the long-term uptrend was broken. The long-term sideways movement was also broken. We started to fall down. But what I do know right now is this. Over the past few days, we've started to consolidate. We've started to hit levels where a lot of people have started to bottom pick. A lot of people started to buy, not because they see things getting better already, but they believe that because it's just too cheap to ignore, that somehow, some way later on, things will start to correct itself, and them buying at a very, very cheap price would give them substantial upside as well. So here's what I want to point out in all of this. Number one, in times of crisis, sentiment is what moves the market. Meaning, no matter how undervalued the market is, no matter how cheap things are, but when everyone is fearful, they will act based on sentiment. When they see people sick, when they see things not working so good, when they see things, when people are scared, when people act out of sentiment, sometimes no matter how undervalued it is, no matter how good the fundamentals are, people will sell. When people want to be liquid, they want to store their cash first because of the uncertainty. If there's one word that investors don't like, it's uncertainty. They rather have something that they know, no matter how bad it is, as compared to something that they're not sure on what it is. They're not sure about what will possibly happen. They're not sure on how this will possibly go. So in times of uncertainty, there's a lot of volatility. In times of uncertainty, people will flock into cash, hence the sell down that we saw. So please remember, a lot of people are saying, bakit ganun? This company should be doing still well. The company should be good for the long term. Why is the stock massively down? Again, it's because in times of uncertainty, in times of something like this, I've even posted a video with Dr. Alvin Ang, a very, very renowned economist. He said that his economic projections are on times when things are doing well and not when there's a pandemic. We are walking on, we are sitting on, we are living something that's very, very different. Anyways, so if you're asking me why markets are down, it's primarily because of sentiment. It's primarily because a lot of people are fearful. It's primarily because a lot of people want to get out from equities. They want to transfer to safe havens like the dollar. They want to transfer into something that's of fixed income. Some want to transfer into gold, or some people just want to stay in cash. And please remember, I said this also in a couple of videos, that in mutual funds, when people start selling, When people want to stay in cash, they have to liquidate their mutual funds, they have to redeem. But when they redeem, the problem with that is fund managers will also have to sell. So even if they sell at a loss, for them to be liquid, for them to have cash, they will have to sell. And again, the stock market is all about supply and demand. More buyers bring the prices up, more sellers bring the prices down. If they're the ones that are selling, guess what? The markets will go down even more. So just a couple of things that I want to share also before I continue with the meat of all of this is, please, for you to be able to win and for you to be able to crush it in this environment, please do not act blindly. Do not act like what everyone else is doing. Do not act based on the herd. You need to, my suggestion, pause, try to take a deep breath, try to strategize, try to think so that you do not base your analysis just on pure emotion. You base your analysis based on logic, based on your strategy, based on fundamentals, especially for this video that we're just focusing on investing as a whole. That being said, also, I don't want this video to just be super optimistic that we're blind to what's really happening. I really believe this, that, and a lot of economists also validated this, that a recession will happen this year, not just overseas but also in the Philippines, that we will have negative GDP, that we will contract, meaning instead of the economy of the Philippines increasing, instead of the economy of the Philippines getting bigger, we will contract, we will get smaller, which in terms of the stock market, it's not good for the stock market. The stock market thrives on the prospects of growth. The stock market thrives on the prospects that, hey, the economy will get much better. This one puts a damper into it, because at the end of the day, if you're on lockdown, especially for the second quarter of the year, I think the first quarter, January, February, we still had economic growth. Some portions of March, we still had it. But second quarter will be very, very tough for the Philippines as well. So the question is, how long will this last? Is it enough that because of the drop right now that we're seeing, that 1, 2, 3, 4 years down the line, the risk that you're taking right now, will it pay off? So my suggestion, especially if you're a long-term investor, if you're coming in right now, you are not looking into it on what you can earn for today. You're looking into it on what you can earn few years down the line as well. We are at the 12-minute mark, guys. Comment below if you're learning. Comment below if you're getting something from this. If this is something that's educating you, super appreciate if you could press the like button so that more and more Filipinos get to see this video as well. Anyways, just to continue, recessions like this are all cyclical. And if you've been watching the videos that I've been putting out years ago, few months ago, even in the talks, for those who attended talks that I did years ago, I kept saying this. Recessions, it's not a matter whether a recession will happen. It's only a matter of when. Because all of this are cyclical. There will be times that the economy will be so good, but there will be times where we are right now, where it's not so good. And if there's one thing that I do know, is this. There will come a point in time where there's maximum fear, when everyone's so scared, when everyone's just selling, when everyone just wants to get out of their position, when everyone doesn't want to invest, when everyone thinks that it's so bleak, when everyone thinks that things won't get any better and everyone just sells. When that happens, when there's peak panic selling, that's one of the times when the market would not drop anymore. I repeat, when there's peak panic selling, when everyone wants to get out, when everyone wants to sell, when everyone doesn't believe in the market anymore, that's when smart money starts to come in as well. But one thing that I'd like you to also look at is that I've been mentioning this already in some of the trading videos, that wait for a consolidation to happen, because there will come a point in time where it will stabilize. That there will come a point in time where that it has dropped so much already that people are looking at it as a point where there's discounts already happening. But the reason why it's not going up yet, because there probably isn't a compelling reason for people to buy higher. And I've said this in the trading videos, or even in the seminars and in the books, that buyers emerge when they want to buy higher. Some buyers are okay to buy it even though it's not so cheap anymore, as long as there's a prospect of growth. So we have to wait also for a time where people will think that the risk or things, the worst is over, that will cause them to buy at a much higher price. So a couple of things. Again, you have to wait until peak panic selling is over, and you have to wait also when you see the market start to stabilize. Or for those who follow technical analysis, it's basically waiting for it to have a consolidation. Again, I repeat, you have to wait for it to consolidate. Consolidations are very, 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 very important to see if there's a level of buying already for the stocks that you're trying to watch. Now, in terms of the economy, not the stock market, I really believe the economy should have. This is predicated on number one, how the lockdown will go and how we treat the virus as well. But if everything goes smoothly, meaning the lockdown ends soon, consumer behavior goes back to normal, we might see the economy bounce back in the second half of the year. We might see things get better. Please remember, there will be some people na who were not able to go on a vacation this second quarter, but they have the money already allotted for their vacation that they will travel at the second half of the year. Hence, there will be a large chunk of spending also. But then again, just to balance it out, also there will be people who will be affected into all of this. But at the end of the day, if things get fixed, we will see the GDP at the second half of the year much, much better than the first half of the year. So a couple of things that you can look at, and which I believe is being done already, more fiscal easing and stimulus, meaning you can expect the government, expect the BSP to pump in more money into the economy, like what they've been doing also. Look at what SSS and GSIS is doing. They're buying stocks at very, 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 very low prices already. So once the government just continues to pump in more money to the economy, as long as there's cash moving around, that protects us as a whole, that protects our economy as well. If you look at the US did, and I've made so many videos about this, the US made QE infinity, quantitative easing up until infinity. They're just gonna pump in trillions of dollars. If I remember this, and I posted a video about this, in the 2008 crash, I think they did 4.5 trillion worth of printing. They're now printing 2 trillion US dollars just for this initial parta, and being that it's QE infinity, they will just massively print whatever amount of dollars they want to keep their economy afloat. So that's one of the things you need to watch out for. Another thing that you need to watch out for is global manufacturing indices bottoming out. If this is from China, no, if you notice it here, you see the big drop of their PMI here. This is one of the stats that a lot of people are watching as well. But anyways, you see the big drop, then suddenly boom, you see it go back again. So this is what we want to see also for the rest of the world. This is what we want to see in Thailand, in Vietnam, in the Philippines. We want trade, we want exports, we want imports to be back to healthier levels. But you have to remember this also, because of the lockdown, number one, demand is not so high. Number two, because of the lockdown, they won't be able to open areas all at the same time, meaning capacity won't be back to the same level as what it was, say, December, November, October last year. So it will take some time for this to fully be back to where it was in 2019. But you have to look at manufacturing indices to start to rebound. So those are two things. Another thing is, and I've said this in so many videos already, at least we need to find that the coronavirus growth or its infection, what they've been saying in TV, flatten the curve, flatten the curve. We have to see this flatten. We have to see infections start to flatten. We have to see the growth of this start to flatten. Of course, if everyone is on a lockdown, there's a bigger chance, really, that the curve will be flattened. But I think the biggest challenge is similar to what happened in Singapore, Hong Kong, etc. Once those lockdowns start to loosen up again, will there be a second wave? Will there be something that will be bigger? That there will there be a bigger infection? But again, the things that you need to watch out for that could cause more people to come back into the markets is that we see the coronavirus infection get flattened, meaning the growth slows down, more people get healed, lesser people die, lesser people get infected. And lastly, this is what I think will bring a big sentiment boost into the market. We find a vaccine, but I don't know if that's happening soon. I don't know if you can find something that will be in a mass level that will uh, heal everyone quickly. But I do believe that there's a lot of tests that are going on right now, but I don't see that happening this April. I'm not sure. No one has a crystal ball on how it will happen, but a vaccine will again put a jolt into the markets altogether, especially for whoever will be the company that will create the vaccine. And again, if you're seeing it right now, companies that are creating alcohol, companies that are creating masks, companies that are creating vitamins, their stocks have been doing better than other stocks that are not highly connected to what people need right now during this pandemic. So you can watch out for those four things. But next part of this presentation is that where are we right now in the grand scheme of things? Hope you guys are learning. No, if you guys are learning, super appreciate it if you can give this video a thumbs up so that more and more people around the world, Filipinos, get to see this and we get to educate people during the lockdown. Anyways, so where are we right now? As what I've mentioned on the top of the video, the market has started to consolidate already from a technical analysis level. So for those who are following charts, for those who are following price action, again, the main underlying trend is still bearish. All of those moving averages are still bearish. Still, there's still no signs of reversal. But what we do know right now, what the charts are telling us right now, what price is telling us right now is that the market is consolidating. From a valuations perspective, we're already cheap. We're very, 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 very cheap already. For those who follow PE ratios, our PE ratio is way below 10. This hasn't happened for a very, very long time. If you followed my blogs pa nun, 2013, when the PSEI hit 7,400, I was already saying that we were so expensive already. PE ratios were way above the 20s. I think we were 23 at that time. We were so expensive, and the biggest issue in the Philippines before was that ang mahal natin eh. We were very, very expensive. That was the biggest issue. Now, we're sitting at an area where PE is below 10. Market cap to GDP is below the 60% levels. And mind you, when these things happen, this would happen when crashes globally would happen. So, the reason why I'm saying this is number one, if you are a long-term investor, again, not a trader, but you are a long-term investor, someone who wants to position when everything is cheap, this is an opportune moment for you to buy stuff that are cheap. But again, number one, never, ever, 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 ever reduce your cash. You still need a lot of cash. Kailangan nyo pa rin ng bala because until we see a complete reversal, there's still a possibility, there's still a potential that markets may just continue to go down. So, though I'm saying that it's very, very cheap, though I'm saying that if you have a very, very long time horizon, this is an opportune moment to come in. Don't use all of your cash right away. You can position, but you need to have cash to fight for another day. Number two, also, if you are a person that can take the volatility, then by all means. But what I do know right now is this: sentiments will change. When people always say, this is so bad, this is the worst, this is something that has never happened before, guess what? That's what they said in 2008. That's what they said in 1997. It's always, this is worse, this is bad. But guess what? Similar to what I said, that recessions happen, cycles happen where markets drop. Cycles also happen that markets rebound. Cycles also happen that markets always will go back. So if you are a person that's willing to come in when there's maximum fear, knowing that things will get better, not today, but in years to come, this could be an opportunity for you. But you must be willing to wait. You must be willing when sentiment is bad. You're taking on the risk that the stocks that you're positioning into might also fall. The stocks that you are positioning into might not go up over the short period of time as well. That's where it's very, very important that you invest in companies with very, very strong balance sheets. You invest in companies that have a large amount of cash because cash is king. Those companies that have a large amount of cash will weather the storm. Those companies with a large amount of cash will be able to spot opportunities that will help them to become profitable later on as well. So please remember this: whoever has the most cash right now will weather the storm. Whoever has the most cash will win. Whoever has the most cash won't be hit as much. They may not be profitable today, they may not be as good in terms of growth today, but if they have cash, they will survive. And if they have cash, they will thrive. And if they have cash, they will be able to win later on. So just look at companies with strong balance sheets, or companies that have track records already, that they've rebounded from past crises, and from those past crises they were able to go and do much better before, and they rebounded and they're much better right now as well. So I guess one of the things that you need to look at also is basically their resilience. One of the things that you need to look at also is their how they were able to pivot their company as well, because I've been mentioning this in a lot of the videos, that there will be new businesses, new industries that will be formed from this crisis, that those who know how to pivot, those who know how to innovate from all of this will win. So in the same way, when you're looking at large listed companies, those who know how to ride and pivot this will do well. So if they have a lot of cash, above and beyond the cash position that they have, if they know how to pivot and shift their company into something that's different, that will give them more revenues, then that's amazing. So look at companies that have been there. 1997 crisis, how did they respond? 2008 crisis, they fell, but how did they respond as well? So those are companies that you look at too. uh, Use this time to study. Since we're in a lockdown, there's really not much you can do as well. Of course, you can trade, you can buy stocks, but at the end of the day, use this time for you to build your skills. If you think that you are a long-term investor, I highly suggest that you study fundamental analysis very well. Don't just watch videos from my channel. Watch Warren Buffett's principles. Watch a lot of those good people who have made it in the past, and it's nice to follow their philosophies. It's nice to learn from them. But again, get my principles, get Warren Buffett's principles, get Peter Lynch's principles, get Ray Dalio's principles, then make something that will work for you. But if there's one thing that I do know is very important, do not waste this time just doing Netflix. Do not waste this time just doing TikTok. They're all good. They're all fun. They all allow you to entertain yourself. But it's time that you also feed your mind. It's time that you build your skill. You make yourself get better. And those who build their skills will always win. And above and beyond that, I'll tell you this. When you want to put money in, always put money. I'll never stop saying this because it's real. It's so true. What keeps me afloat today, that I'm okay regardless of this drop, is I only put an amount of money that I can tolerate. I only put an amount of money that even if it goes to zero, I'm still okay. And that's very important in the way you do things. You only should put an amount of money that you can tolerate. That's why even if the market is bearish, as long as you're putting an amount of money that you'll never touch in a very long period of time, that you still have cash flow from whatever sources of income that you have, or in the same way, you are positioning that even if it goes down, you can still sleep well at night, then by all means, invest. It doesn't matter if it's millions, it doesn't matter if it's tens of millions, it doesn't matter if it's hundreds, or it doesn't matter if it's just 1,000 pesos, as long as that's an amount of money that you can tolerate in spite of the volatility. And if you're coming in right now, very important is you have patience and you have discipline. Patience that if it's not going the way you want it to go, you stay the course and you follow your plan. The discipline also, that unless your buy signals are hit, that's the only time that you buy. Patience and discipline also, because if you come in now and it does not really reverse for the next 6 months or the next year, you're willing to hold on to it. You're willing to forego whatever's happening. You're willing to ignore the noise as well. And guess what? That's how you win. You will always win if you follow your conviction. You will always win if you follow your strategy. You will always win when you ignore the crowd, you ignore the noise, you just follow what style, what strategy, what fundamentals slash technicals you're using in order for you to be able to win and trade the markets with confidence. So that's my recap for the 2020 market crash. Did you guys learn a lot? Comment below, guys, if you have any questions from all of this. Comment below if you have anything that you guys want me to make any additional videos on top of this. I've had a lot of comments on videos topics. Now, some of the more basic topics, please just search it uh in the videos that I have. I have over 1,300 videos already. Most of the basic topics have already been covered. But if there's any topic that's not covered there, just put them in the comment section. The more unique, the better. The more that I haven't discussed it, the better. We'll make videos on top of that. If you want to appear in any of the Stocks by Request sessions or Ask Marvin sessions, message me on IG with your question. If it's amazing, we're gonna include you to be part of the vlog as well. So if you guys got a lot from this, super appreciate it if you could put a thumbs up, because putting a thumbs up makes this video relevant and more Filipinos get to see this as well. And if you have not subscribed to my channel yet, super appreciate it if you can subscribe. We're very, very, very close already to 100,000 subscribers. It would be amazing to see a Filipino stock market channel hit 100,000. That's an amazing feat. It's something that's very, very interesting. And also, guys, I opened up a second channel. It's called Stock Investing Made Easy. That's where all of the cartoons are. If you're new and want to learn more of the basics of investing, I highly suggest that you subscribe to this channel too. And for those who want to support the advocacies that I create, these are all infographics. This will help people who want to learn investing on an easier and different approach as well. And for those who want to learn more, I have these books about stock investing, 5 books. They're all available in Shopee, and they're also available via my online store. They're all in the description below. Oh, by the way, also, if you want to subscribe to my channel, they're also in the description below. And I have 2 courses. One is with Chinkitan. It's a Tagalog stock market course where we teach you the basics of the market. It's called Stock Market for Everyone. You can comment stock market if you want to join, and I'll send you the link to join, or you can just check it in the description below, or comment stock market. For those who want to join my business, entrepreneurship, and investing course, it's with Sean Si. It's called Make Money, Grow Money. The link is also in the description, but if you want to join as well, just comment Make Money, and I'll send you the links on how you can register as well. So, I guess that's it for now, guys. I hope you guys got a lot from this. I hope that this is something that gave you enough insight also for you to be able to win, for you to be able to trade, for you to be able to get a lot of insights from all of this. I have 2 videos here that are popping up. You can watch them as well so that you get more and more content about investing in the stock market. So that's it for now. This is Marvin Guillermo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, guys, and God bless you all.